Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today the market's extended for the third day from the strength that started last Thursday. Last Thursday we started breaking above that right shoulder. That's when the trade triggered. A lot of guys got long that day. Some took some home over the weekend with a bit of risk. Monday we gapped down. Great area to buy some high beta tech. Today we extended. Now's the time when it gets tricky. I feel like you're always in a tricky spot, but at this point, to me, I feel as if it's a prudent spot to take off some longs. I know that it doesn't mean you get, balls to the wall short, I have to use my language, but it means you just be a little prudent. And I kind of get a little upset because I'm getting all these notes now where all these people that were so damn bearish below 1300 are all getting so damn bullish above 1360, right into a spot where I'm selling some longs and just getting a little net short for a trade. So to me, I just don't understand it, how untactical or how guys just maneuver this market so damn poorly. And I said damn 4 times, that's how upset I am. Anyway, I'll show you the reason why. You go to the chart of the S&P. Here is where, remember this head and shoulders top pattern that gave us a nice move all the way down to the lows. Here is where everyone that had to capitulate out of their last long sold it as we broke the 200-day and then we reclaimed it. This was a spot to get a little long. This was a spot when we took back the 200-day. That's one spot. And then we had to move up. Started going sideways, started going higher, starting holding the top third of this range as we developed the right shoulder. I think right on this day is when we sent out the pattern saying there is a case for an inverted head and shoulders pattern where let's see if this right shoulder develops. If you want to dip your toe in, this is a spot to trade a little bit long, some of the best acting stocks, versus this, just say 1306. It was definitely choppy, remember, up, down, everyone was so upset about that. And then finally that Thursday, we broke above that high end of the range, or close to it. This is when I went long the diamonds and some other stocks just because spiders were going ex-dividend. And P.S. Since then, this was Thursday, Friday, Monday, Tuesday, we now went as high as 1363. And now this is when most people in the media are starting to get a little bullish. And I hate that. Bearish here, bullish there. That's not the way you tactically maneuver the trade. Look where we're coming into, guys. This was that head and shoulders top pattern. Remember, this is when you triggered below this 1360, and that's exactly where we just got back up to. A nice spot to symmetrically sell some. Okay, if you want to talk two different strategies. Okay, sometimes an inverted head and shoulders pattern could have two parts of it. You could see part 1 fulfilled, sometimes part 2. Same way on head and shoulders top. Sometimes, it's hard to get massive follow-through unless the follow-through is deserved. On the downside, it felt like the follow-through was deserved. The measured move actually got, went a little bit further based on the macro headlines. Right now, I still don't see any real macro headlines except for hopes and stimulus potential. So I just don't think that we should be going well above the full measured move. And I kind of think that even to get to where we are today, I'm pretty impressed with. And I was trying to maneuver and hold longs. If you look here, you will see that sometimes the first move is the depth of the right shoulder. And the depth of the right shoulder right now was the low of 1306. And then you have the high, just say here, of 1333. So, say about 30 handles. So 30 handles is supposed to be the first move. And then right here from 1333 to 1363, what is that? That's 30 handles. What do we have over here? Pretty big resistance where we broke down from. So for me, I think this is a spot to be a little prudent and sell some longs. If you were in tier 1 here and you added to tier 2 there, at least get back to tier 1. If you are holding, just say 8, 9, 10 positions long, even if they're macro positions, and you want to tactically be safe, this is when you start putting on some shorts in the spiders, or maybe even buy some VIX as it got crushed. Just a little bit of protection. Don't mute your gains in the longs that you love. Like, don't be 100% hedged and be portfolio neutral, but you don't have to be all long and just in the mercy of what could be a headline or two that makes us a little bit weaker. So you could tactically maneuver. Have 4, 5, 6, 7, 8, 9, 10, 12 longs if that's what you do, and just have some shorts. So this way, if you open down, you can cover your shorts. sleep well at night, and then add to some longs if they hold up well. But now the overall measured move, which could actually happen, okay, through the Fed, maybe into the end of this quarter as the portfolio managers try and mark things up. You still have about a week and a half until July 4th. And I remember last time, July 4th, there was a really big pain trade from the short side where everyone got squeezed. You look here, go back to the chart. The overall measured move, and this is just my cotton napkin technician stuff here, just say about 1280. Some people measure from the bottom here of 1266. Some do it from this area. So I would just say it's not a perfect science. So from just say about 1280 to 1330 is about 50 handles. From 1330 takes you up to about 1380, maybe even 1390. And what would that do? That would take us back to where we broke down from, if you remember that actually day I was in the Bahamas when I got stopped out of all my stock right there. So here is a good target that was met. If you stayed with the rally, congratulations. If you bought leading stocks, you got paid. And now it's time to maybe be hedged from here to here and just mute maybe some of your gains in some of your stocks, but maybe even add alpha by covering on down days and adding to longs and let it maneuver all the way up. The only thing that kind of is just tricky is that the way this market moves, it could be an elevator. And if you start shorting here and you're just net short and you're rolling it up, it could be trouble. The same way here, if you tried playing a dip, there was like one little pause right here before it continued all the way down. But then actually had a little bit of a counter trend trade. So PS, oscillators plus 75. We just met a pretty big target. Yes, there's room left, but entering here the first time to initiate new longs, I think is tough. But with that said, I'm going to roll through some charts because there has been, people are getting rewarded for being in the right areas. eBay off the charts, talked about it so many times. Pow, no bear market here. Great stock pickers game, above all the moving averages, even good for a breakout trader who bought at 41.60, got 2 days of follow through. Congratulations. Dunkin Donuts pounded the table on this thing so many damn times. Wasn't the easiest trade, but those that put it in their IRA or their macro account like we talked about, getting paid, I would definitely trade some. Hold some, trade some. If you're going to sell it here and not buy it back and you're a macro investor, then just sit. Under Armour, another stock we've had here, new highs, looking good. Target and Walmart, okay. And actually, nice little setup here in Target. Target, a little wedge type pattern. This is in the game to make new highs. That looks pretty decent. Walmart, my retail stock of the year on CNBC, still doing good, broke out well above this. We tried shorting a little bit in here, didn't work. Hopefully you covered and you weren't stubborn. And now it seems like it's trying to go again. After a 10-year monotonous monthly channel, it was good to be able to take their pain as a stock timer. That's what I talked about when I was on CNBC. I said, for 10 years, it's been consolidating this huge move from down here, 97. Now it's going again, looks okay. Then you go into high beta land also. You had Amazon, nice continuation to yesterday, held that earnings gap that we talked about. You look at the daily chart here, looking pretty good. Not a barn burner, but not so bad. Not, here was your little buy area. It's continuing, or when it reversed here after holding a big portion of the earnings gap, you could have bought as it held higher right there. Netflix, I talked about in the morning call. I had it in the blog. I said it could get going. I missed the trade. This doesn't look like much, but nice little move here for Netflix today. So I know the GOAT, my friend over at boot camp, was talking about it, and I think he agrees that it could just churn its way up to this moving average and give another nice trade. If you're in there, just trail it and continue to stay with it. Google is a bottom feeder trade, extended a little bit more. It held big support. If you sold when it broke this major support around 596, you had the luxury to re-enter as it held right around this 560 and reversed up. It does have some more room. Here is a spot, 587, and then you have 597. If you want to look at some others, Microsoft, kudos to Sperling. There are ways to buy these mega caps, and he was talking about it, buying the 200-day. I know I talked about it here on Bloomberg way back when, right when it broke above this descending trend line and opened itself up. Then, obviously it's always tough to trade or chase these mega caps or chase anything. So here is your buy on the 200-day. Now it is back of resistance. I would say sell some and see how it shakes out. And then you go to other sectors that have been laggards, sectors that are playing catch up. When you rally and the AD line gets better, or the breadth, whatever, BREADTH anyway, expands, you get some laggard type plays. And today, a lot of guys for cash flow caught some of the ags. I missed those because I wasn't around for them. You have my best in breed ag, CF. You look at the daily chart, had a nice wide range move today. Okay, this is why we say sometimes it's good that these lower level pivots could serve as good catalysts. And here you go for CF. Mosaic, look at that, came to life. Jill, I think last time we talked about it, we talked about this also, this descending channel here, and it broke above it, coming into resistance, probably a good area for a rest, but congratulations. I know she's been pounding the table to accumulate that on weakness all year. Could see higher prices. POT, nice little wide range bar, bottom feeder type trade, looking decent here, broke above this. Anyone who was shorting against this trend line, hopefully you covered. Now it looks good, closed near the highs. Next level is where it broke down from, right around 42. So this too, nice active trade. Not really an investment at this time, maybe a tier 1 at best, but nice active trade. The banks that were weak yesterday, money went to them today. Goldman Sachs was up, still very, very choppy, but I guess it could continue. This also has some room to maybe the 100 area. Typically, if Goldman follows the same pattern, it'll be down tomorrow, but maybe it gets another day if it could trade through today's high tomorrow. JP Morgan also extended a bit, working its way back to this moving average. This is when they announced a $4.2 billion loss. They bought the news after selling it here, so it's helping move some of the markets, so you can time some scenarios too. Bank of America, what are you doing? I went long it today. I tried some yesterday just because it had a nice clean pattern, breaking above this little wedge. Sold some into the moving average. It has I'd say it needs a rest there. Casinos woke up. I tweeted yesterday that I bought a little LVS. I'm like, LVS win, could play catch up. The market wants to go. People like these names. They've been crushed, nice and tight. You look at LVS here. LVS just broke above a minor level right here. So it broke above, so that's where I added. I went home with tier 1. I do think this could work its way back to 48-ish. This is definitely a laggard play, but it's worth your attention, worth maybe a buy versus 44 for some action. Win, pretty decent trade today. I avoided it because I didn't need to be in both, but this was clean also, broke above a similar level. Now we'll see if it could actually get above this, which would be pretty interesting. If it does, this has room also. It's been battered and bruised ever since this outside reversal right here on that land acquisition news. Facebook, still hanging around. To me, I think it needs time. If you're trailing this thing, congratulations. Here was your red dog reversal. This was when it got frisky and traded above 28.10. And now look at it. It's hovering right in front of that old resistance. The longer it goes sideways here, the more the higher the probability. Maybe it even trades through this and continues. I know some guys are probably trying to short it. For me, I just sold my long, and I'm just going to wait. If we can get a better setup here, I'll be a buyer through this area for another move, maybe 1 or 2 more days of sideways. Zynga, the tail of the dog that's wagging, holding a bit higher. Some bought on this day. It's holding in there. This is a type of trade that if you're holding a portfolio of 7, 8 stocks, this could be one of them, because you don't want to watch it too close, because it's gonna drive you crazy. Can it get to $7? And is it a nice percentage gain? Maybe even to the moving average here? Yes. But if you're just focusing on this, you're probably a very inexperienced trader, and you shouldn't be watching my video. I'm kidding. Well, you should be. Anyone could be watching the video. I'm just saying that guys who are trying to take these little type of stocks, not going to work. If you have a portfolio and you think the market will lift it, let it be one of them. Let's see what Groupon did today. What did Groupon do? Groupon, I would say probably, look at that, sideways. Sideways is good after a move. We talked about it holding this level, holding this area that it broke. This was a downtrend, holding sideways another day or so, and then you might have a trade here through this. I'll be looking at this through 1140. It can continue. So you're seeing a lot of nice setups. I think some people are probably rolling up the spider short with the pain trade, but if that's you without any longs, you read the tape the wrong way. You've been reading the headlines, you're not looking at the action. The real action has been in the tape, not the headlines. We've been talking about that all week on how it might look like you have doomsday in Europe, but the market's not paying attention yet. We'll see when the market will pay attention. That's when we'll change gears again. We changed gears when we saw the head and shoulders top for the decline, and then the inverted head and shoulders pattern that wound up yielding a nice move to the first measured area today. So this is when I get a little prudent. This is when I start to switch gears and not go all directional, and I try and play both ways. Now's the time to, if you want to stay with the rally. IBD put us back in the market rally on Friday, and since then we've had 2 nice healthy days of action. Sometimes what they do is they squeeze into the Fed day to really push the shorts to the brink, and then that's when you get your little short-term top and you get your rest, and then we get to measure the commitment. And then I'm sure everyone will complain that we're in a range and you can't buy highs and you can't short bottoms. So don't complain. Trade what you see, not what you hear. And there is a lot of cash flow out there. Scott Redler, T3 Live, the recap. See you tomorrow morning call. Have a good night.